Primeiro, Bitcoin is a decentralized digital currency that operates without the control of any government, bank, or central authority. It was designed to function as peer-to-peer electronic cash, enabling users to send value directly to one another over the internet without intermediaries. Segundo, unlike traditional currencies such as the US dollar or euro, Bitcoin is not printed or issued by a central institution. Instead, it is generated algorithmically through a process called mining and distributed across a global network of computers that validate and record transactions. Terceiro, Bitcoin exists purely in digital form. There are no physical coins or notes. Ownership is represented by cryptographic keys. A public key, your Bitcoin address, and a private key, your password to access and spend those funds. Losing the private key means losing access to the Bitcoin permanently. Cuarto, the total supply of Bitcoin is mathematically capped at 21 million coins. This hard limit is coded into the protocol and cannot be changed without near-unanimous consensus from the entire network, making Bitcoin inherently scarce, similar to precious metals like gold. Quinto, Bitcoin's value is not backed by any physical asset, government, or legal tender status. Its price is determined entirely by market forces, supply and demand, and can fluctuate significantly based on investor sentiment, adoption, regulation, and macroeconomic conditions. Sexto, transactions on the Bitcoin network are irreversible. Once confirmed by the network, they cannot be canceled, reversed, or modified. This makes Bitcoin secure against chargebacks and fraud, but also requires users to be extremely careful when sending funds. Sétimo, Bitcoin is borderless. It can be sent from anywhere in the world to anywhere else, 24/7, without needing permission from banks, governments, or payment processors. Transaction fees and confirmation times vary depending on network congestion, but are generally independent of the amount being sent. Octavo, Bitcoin is permissionless. Anyone with an internet connection can download a wallet, generate an address, and start receiving or sending Bitcoin without needing approval, identification, or a bank account. This makes it uniquely accessible to the unbanked and underbanked populations globally. No. Bitcoin is censorship-resistant. Because no single entity controls the network, it is extremely difficult for governments or institutions to block transactions or freeze accounts. This feature is particularly valuable in countries with unstable currencies or oppressive financial controls. Décimo, while often called digital gold, Bitcoin is more accurately described as a new asset class. A decentralized, digitally native store of value and medium of exchange that operates outside the traditional financial system, with unique properties that distinguish it from both fiat currencies and commodities. Primeiro, Bitcoin operates on a technology called blockchain, a distributed public ledger that records every transaction ever made on the network. This ledger is not stored in one location but is replicated across thousands of computers, nodes, worldwide, ensuring transparency and redundancy. Segundo, each block in the blockchain contains a list of recent transactions, a timestamp, and a cryptographic reference to the previous block. This creates a chronological, tamper-proof chain where altering any past transaction would require altering every subsequent block, a computationally impossible task. Terceiro, transactions are grouped into blocks approximately every 10 minutes. Before being added to the blockchain, each transaction must be validated by network participants to ensure the sender has sufficient balance and hasn't already spent the same Bitcoin elsewhere, preventing double spending. Quarto, validation is performed by miners, specialized computers that compete to solve a complex cryptographic puzzle. The first miner to solve the puzzle gets to add the next block to the chain and is rewarded with newly minted Bitcoin plus transaction fees paid by users. Quinto, this process is called proof of work, POW. It requires massive computational power and energy consumption, which acts as a security mechanism. The cost of attacking the network would far exceed any potential gain, making Bitcoin one of the most secure computing networks in existence. Sexto, miners are incentivized not only by block rewards but also by transaction fees. As the block reward decreases over time, having every 210,000 blocks, roughly every 4 years, transaction fees will gradually become the primary incentive for miners to keep securing the network. Sétimo, Nodes, computers running Bitcoin's open-source software, continuously verify the integrity of the blockchain. They reject any invalid transactions or blocks that don't follow the protocol's rules. This decentralized validation ensures no single point of failure or control. Tavo. Bitcoin's scripting language allows for basic programmable transactions, such as multi-signature wallets, requiring multiple keys to authorize a transaction, or time-locked releases, but it is intentionally limited to prioritize security and simplicity over complex smart contract functionality. No. The UTXO, unspent transaction output, model is how Bitcoin tracks ownership. Instead of accounts with balances, Bitcoin uses a system where each transaction consumes previous outputs and creates new ones. Your wallet's balance is simply the sum of all unspent outputs linked to your addresses. Decimo. Bitcoin's protocol is open source and transparent. Anyone can review, audit, or contribute to the code. Changes to the protocol require broad consensus from miners, nodes, developers, and users, making Bitcoin highly resistant to arbitrary updates or centralized control. Primeiro, Bitcoin was created to address fundamental flaws in the traditional financial system, specifically, the reliance on trusted third parties, banks, payment processors, governments, to facilitate and validate transactions, which introduces inefficiency, cost, and vulnerability to censorship or failure. Segundo, in traditional banking, cross-border payments can take days, involve multiple intermediaries, and incur high fees. Bitcoin enables near-instant settlement across borders with minimal fees, regardless of the amount sent, making it ideal for remittances and international commerce. Terceiro, central banks can print unlimited amounts of fiat currency, leading to inflation and devaluation of savings. Bitcoin's fixed supply of 21 million coins makes it immune to monetary inflation by design, offering a hedge against currency debasement and irresponsible monetary policy. Quarto, in countries with unstable governments or hyperinflation, e.g., Venezuela, Argentina, Lebanon, citizens often lose purchasing power rapidly. Bitcoin provides an alternative store of value that cannot be seized, frozen, or inflated away by local authorities. Quinto, financial censorship is a growing concern. Banks and payment processors can deny service based on political views, geography, or regulatory pressure. Bitcoin's permissionless nature ensures that no entity can prevent someone from sending or receiving value, as long as they have internet access. Sexto, traditional financial systems exclude billions of people who lack formal identification, credit history, or access to banking infrastructure. Bitcoin requires none of these, only a smartphone and internet connection, enabling financial inclusion for the unbanked population. Setimo, the 2008 financial crisis exposed the fragility and moral hazard of centralized financial institutions deemed too big to fail. Bitcoin was launched in direct response to this, offering a system where trust is placed in code and cryptography, not fallible human institutions. Oitavo, auditing and transparency in traditional finance are limited. Users must trust banks to accurately report balances and transaction histories. Bitcoin's public ledger allows anyone to independently verify every transaction, promoting unprecedented financial transparency. No. Chargeback fraud and payment reversals are common in credit card and digital payment systems, creating risk for merchants. Bitcoin transactions are final and irreversible, reducing fraud risk and eliminating the need for costly dispute resolution mechanisms. Décimo, Bitcoin's creation represents a paradigm shift from a financial system based on institutional trust to one based on mathematical proof and decentralized consensus. It doesn't seek to reform the existing system but to offer a parallel, opt-in alternative that operates by fundamentally different rules. Primeiro, Bitcoin can be used as a medium of exchange to purchase goods and services from thousands of merchants worldwide, from online retailers and VPN providers to physical stores, restaurants, and even real estate agencies that accept Bitcoin payments directly or via payment processors. Segundo, many users treat Bitcoin primarily as a store of value, similar to gold, buying and holding it long-term as a hedge against inflation, currency collapse, or systemic financial risk. This HODL strategy is common among investors who believe in Bitcoin's long-term appreciation. Terceiro, Bitcoin is widely used for remittances. Workers abroad can send Bitcoin to family members in their home countries faster and cheaper than through traditional services like Western Union or MoneyGram, especially in regions with limited banking infrastructure. Quarto, nonprofit organizations and charities increasingly accept Bitcoin donations, allowing global supporters to contribute without geographic restrictions or high processing fees. Some charities even convert donations to local currency immediately to fund operations. Quinto, freelancers and remote workers in countries with currency controls or unstable banking systems often request payment in Bitcoin to avoid devaluation, capital controls, or banking delays. Platforms like Bitwage facilitate payroll in Bitcoin for international teams. Sexto, Bitcoin can be integrated into business accounting systems using specialized wallets and payment gateways that automatically convert received Bitcoin into local fiat currency, reducing exposure to price volatility while still benefiting from fast, low-cost settlement. Sétimo, some users leverage Bitcoin for privacy-preserving transactions. While Bitcoin is not anonymous, all transactions are public. Techniques like CoinJoin or using privacy-focused wallets can enhance financial privacy compared to traditional banking. Octavo, Bitcoin is increasingly used as collateral in decentralized finance, DeFi, platforms and lending protocols, allowing users to borrow fiat or stablecoins against their Bitcoin holdings without selling them, unlocking liquidity while maintaining exposure to price appreciation. Nono, institutional investors, corporations, and even nation-states now hold Bitcoin on their balance sheets as a treasury reserve asset. Companies like MicroStrategy and Tesla have allocated billions to Bitcoin as a strategic hedge against macroeconomic uncertainty. Decimo, everyday users can start using Bitcoin with minimal technical knowledge. Mobile wallets, user-friendly exchanges, and Bitcoin ATMs make it easy to buy, store, and spend Bitcoin. The ecosystem continues to evolve with better UX, security, and accessibility tools for mainstream adoption. Primeiro, Bitcoin's security model is based on cryptography, specifically public key cryptography. Each user has a private key, a secret number, that proves ownership of their Bitcoin, and a public key, their Bitcoin address, that others can send funds to. Without the private key, funds cannot be spent. Segundo, losing your private key means losing access to your Bitcoin permanently. There is no forgot password option or customer support to recover it. This places full responsibility on the user to securely back up and store their keys, typically using hardware wallets or encrypted seed phrases. Terceiro, Bitcoin's blockchain is secured by the proof-of-work consensus mechanism, which requires miners to expend real-world energy to validate transactions. The cost of attempting to rewrite transaction history, a 51% attack, is prohibitively high, making the network extremely resistant to tampering. Quarto, the decentralized nature of Bitcoin, with thousands of independent nodes verifying transactions, ensures that no single point of failure exists. Even if some nodes go offline or are compromised, the network continues to operate securely and reliably. Quinto, wallet security is critical. Software wallets, on phones or computers, are convenient but vulnerable to malware or hacking. Hardware wallets, physical devices that store keys offline, offer the highest level of security for long-term storage and large holdings. Sexto, phishing, scams, and social engineering are the most common threats to Bitcoin users, not flaws in the protocol itself. Users must be vigilant. Never share private keys, verify wallet addresses before sending, and avoid clicking suspicious links or downloading untrusted software. Sétimo, multi-signature, multi-sig, wallets require multiple private keys to authorize a transaction, adding an extra layer of security. This is commonly used by businesses, exchanges, and advanced users to prevent single points of compromise. Octavo, Bitcoin transactions are pseudonymous. Addresses are not directly linked to real-world identities, but all transactions are publicly visible on the blockchain. Sophisticated analysis can sometimes link addresses to individuals, so privacy-conscious users employ techniques like address rotation or CoinJoin. No. Exchanges, where most people buy Bitcoin, are frequent targets for hackers. it is strongly recommended not to store large amounts of Bitcoin on exchanges. Instead, withdraw funds to a personal wallet where you control the private keys, not your coins. Decimo. Bitcoin's codebase is open source and has been audited by thousands of developers worldwide over more than a decade. While no system is 100% immune to bugs, Bitcoin's simplicity, conservative development philosophy, and battle-tested code make it one of the most secure financial systems ever created. Primeiro. Bitcoin's economic model is defined by absolute scarcity. Only 21 million coins will ever exist. This is hard-coded into the protocol and enforced by the global network. No government, corporation, or individual can inflate the supply or create more Bitcoin arbitrarily. Segundo. New Bitcoin is issued approximately every 10 minutes as a reward to miners who validate transactions. This reward, known as the block subsidy, started at 50 BTC per block in 2009 and halves roughly every 4 years, an event known as the halving. Terceiro. Halvings reduce the rate of new Bitcoin entering circulation, mimicking the extraction rate of precious commodities like gold. There have been 3 halvings so far, 2012, 2016, 2020, and the next is expected in 2024, reducing the block reward from 6.25 BTC to 3.125 BTC. Quarto. The predictable, decreasing issuance schedule creates a disinflationary monetary policy, the opposite of fiat currencies, which typically lose value over time due to continuous money printing. Bitcoin's scarcity is expected to increase its value over the long term as demand grows. Quinto. As block rewards diminish, miners will increasingly rely on transaction fees to sustain their operations. This transition is designed to maintain network security even after all 21 million coins have been mined, projected to occur around the year 2140. Sexto. Bitcoin's market value is driven by adoption, utility, and perception of scarcity. Unlike stocks or bonds, Bitcoin generates no cash flow. Its value comes entirely from its properties as a decentralized, censorship-resistant, portable, and scarce digital asset. Sétimo. Network effects play a crucial role in Bitcoin's valuation. As more people use, accept, and hold Bitcoin, its utility and liquidity increase, reinforcing its value proposition. This creates a self-reinforcing cycle of adoption and price appreciation over time. Tavo. Bitcoin's volatility is often cited as a weakness, but it is also a natural characteristic of a young, high-growth asset class. As market depth increases and institutional participation grows, volatility is expected to decrease, making Bitcoin more suitable as a stable store of value. No. Macroeconomic factors heavily influence Bitcoin's price. During periods of quantitative easing, currency devaluation, or geopolitical instability, investors often turn to Bitcoin as a non-sovereign hedge. This correlation with traditional markets is evolving but remains distinct. Decimo. Bitcoin's economic model is revolutionary because it introduces digital scarcity for the first time in human history. Unlike digital files that can be copied infinitely, Bitcoin is provably scarce, durable, divisible, and transferable, properties that make it uniquely suited to function as money in the digital age. Primeiro. Bitcoin's price volatility remains its most significant barrier to mainstream adoption as a medium of exchange. Large price swings within hours or days make it difficult for merchants and consumers to use Bitcoin for everyday pricing and budgeting without hedging mechanisms. Segundo. Transaction fees and confirmation times can become high and slow during periods of network congestion. While solutions like the Lightning Network aim to address this, base-layer Bitcoin transactions are not optimized for microtransactions or high-frequency payments. Terceiro. Bitcoin's energy consumption is frequently criticized. The proof-of-work mechanism requires substantial electricity, though an increasing share comes from renewable or stranded energy sources. The environmental debate continues, with proponents arguing that security justifies the cost. Quarto. Regulatory uncertainty poses a major risk. Governments may impose restrictions on Bitcoin ownership, trading, or mining. While outright bans are difficult to enforce due to Bitcoin's decentralized nature, regulatory crackdowns can impact liquidity, exchange operations, and institutional adoption. Quinto. Bitcoin is not anonymous. it is pseudonymous. All transactions are permanently recorded on a public ledger. Sophisticated blockchain analysis can link addresses to real identities, especially when users interact with regulated exchanges that require KYC, know your customer, procedures. Sexto. Irreversible transactions mean user error can be catastrophic. Sending Bitcoin to the wrong address or falling victim to a scam results in permanent loss. There is no central authority to appeal to for recovery, placing full responsibility on the user. Sétimo. Scalability remains a technical challenge. Bitcoin's base layer processes roughly 7 transactions per second, far less than Visa or MasterCard. Layer 2 solutions like Lightning aim to solve this, but widespread adoption and usability are still evolving. Octavo. Bitcoin faces competition from thousands of other cryptocurrencies, many of which promise faster transactions, lower fees, or additional features like smart contracts. However, none have matched Bitcoin's security, decentralization, liquidity, or brand recognition. No. Custodial risk is significant for users who store Bitcoin on exchanges or with third-party services. Numerous exchange hacks and bankruptcies, e.g., MTGOX, FTX, have resulted in massive losses for users who did not control their own private keys. Décimo. Bitcoin's fixed monetary policy is both its greatest strength and a point of criticism. Unlike central banks, Bitcoin cannot adjust supply to respond to economic crises or deflationary spirals. Critics argue this lack of flexibility could hinder its utility in extreme macroeconomic scenarios. Primeiro. Bitcoin's long-term trajectory points toward increasing institutional adoption. Major banks, asset managers, and corporations are integrating Bitcoin into their portfolios, payment systems, and treasury strategies, signaling growing legitimacy and mainstream acceptance. Segundo, nation-states are beginning to explore Bitcoin as legal tender, e.g., El Salvador, or as a reserve asset to diversify away from the US dollar. This geopolitical shift could accelerate Bitcoin's role as a neutral, global settlement layer outside the control of any single country. Terceiro. Technological upgrades like Taproot, activated in 2021, improve Bitcoin's privacy, efficiency, and smart contract capabilities without compromising security. Future protocol improvements will continue to enhance functionality while preserving Bitcoin's core principles. Cuarto. The Lightning Network, a second-layer scaling solution, enables instant, near-free Bitcoin transactions. As adoption grows, Lightning could make Bitcoin viable for everyday purchases, tipping, and microtransactions, unlocking new use cases beyond store of value. Quinto. Bitcoin mining is becoming more geographically and energetically diverse. Miners are increasingly using excess renewable energy, flared gas, and other underutilized power sources, turning Bitcoin into a tool for energy monetization and grid stabilization. Sexto. Regulatory clarity is slowly emerging in major markets like the US, EU, and Japan. While regulation may impose compliance costs, it also legitimizes Bitcoin, encourages institutional participation, and protects consumers, ultimately fostering sustainable growth. Sétimo. Education and user experience are improving rapidly. Simplified wallets, Bitcoin-only banks, debit cards, and payroll integrations are lowering barriers to entry, making it easier for non-technical users to buy, store, and spend Bitcoin safely and confidently. Octavo. Bitcoin's role as digital gold is solidifying. With its scarcity, durability, and global accessibility, it is increasingly viewed as the premier non-sovereign store of value, a hedge against inflation, financial repression, and systemic risk in the 21st century. No. Global macroeconomic instability, including debt crises, currency collapses, and loss of confidence in central banks, is driving more individuals and institutions toward Bitcoin as a neutral, rules-based alternative to legacy financial systems. Decimo. If you found this breakdown valuable, make sure to like this video, subscribe to the channel, and hit the notification bell so you never miss our deep dives into cryptocurrency, finance, and technology. Drop a comment below. What's your biggest question about Bitcoin that we didn't cover? Let us know and we might feature it in our next video. Thanks for watching. See you in the next one.